The moment you can provably hack Bitcoin's blockchain, that is the day Bitcoin becomes worthless. The story is over. So there is no incentive. There is no incentive for anybody to spend billions of dollars to try and do something that still seems impossible to achieve, only to end up with Bitcoin in their wallet that is worthless because you just hacked the blockchain and you just ended the whole game.
Hi guys, welcome to another episode of the Money Shot podcast. In our last two episodes, we spoke about blockchain technology, Bitcoin's blockchain technology. We launched a video which had visual aid to explain blockchain tech. Then we did a Q&A format video wherein we cleared a lot of the common questions that people have about blockchain. This episode is a continuation of that. In this episode, I have a specific question for Vishesh. I have Vishesh and Parikshit with me on call. So Vishesh, let me jump into the question straight away. So you have said multiple times that Bitcoin cannot be hacked, it's hack proof. But theoretically, let's say somebody wants to give a shot at hacking Bitcoin. Okay. So theoretically, what would it take to hack Bitcoin?
Yeah, this is not a very intuitive thing to understand. So I can try and help explain how that plays out. Now that you guys understand how Bitcoin's blockchain works, how the technology works, and how the whole protocol works, you understand what proof of work is. And so now if you could think back, the cost of proof of work is what basically disincentivizes the miner from cheating the system, right? Because if a miner has to cheat the system, or anybody, right? Like anybody who has to hack the blockchain. What does hacking mean? Hacking means you're going in, if you were to hack a bank's database or a ledger, you would go in and you would change the amount sitting in a particular bank account and you would transfer it to another bank account. That would be your purpose of hacking, right? You're trying to steal funds. So you're trying to change the ledger. Now to change Bitcoin's blockchain ledger, you need to basically be a miner with ill intentions, with the intention of hacking it. So, as a miner, the only way you can write a new block or you can rewrite transactions is by showing proof of work. And proof of work, as we've already explained, is a process in which you have to incur a high amount of cost by expending electricity and compute to even win the right to create a new block. And so proof of work becomes a very disincentive in terms of wanting to even hack blockchain. Now, with that said, let's still go theoretically into what would it take to cheat the system. What are the things that a miner can do? And really only two things come to mind. One is the miner can not find the nonce, right? Like, so okay, there are two incentives. One is he goes and changes the ledger and he tries to move Bitcoin from another wallet to his own wallet or whatever he may want to do. That's one way. The other way is he tries to win the race, or tries to at least make the whole network believe that, hey, I won the race, I solved the puzzle faster, and he tries to win rewards of new Bitcoin without actually having solved the puzzle. So now, solving the puzzle part, he can go ahead and tell the world, like all the validators on the network, that, hey, I found the nonce. But it's very easy, right? We said Bitcoin is a decentralized ledger. He can go and tell a validator that this is the nonce, but the moment that validator tries to validate that nonce with the block header of the previous block, which every validator has his own copy of, they will see that he's lying. So there's no point in doing that. The other is he can try and change a transaction. He can change an older transaction. He can try and move funds from some wallet that is holding thousands of Bitcoin into his own wallet and then try to pass that new block and get that block approved through the blockchain. Well, the problem with that is the moment he tries to change any transaction, any detail, any character, right? Remember, we talked about SHA-256. Any character that he tries to change in any transaction, the whole hash code of that block will change. And the moment the hash code changes, it will not match with what the validator's hash code is. And then again, the moment the validator tries to validate his work, he will say this is incorrect. So really, theoretically, these are the only two possibilities that a miner has to try and hack the network or cheat the network, and he cannot do that. But with that said, if theoretically, another theoretical possibility is that if a miner can control 51% or more of the network. Now, we did say that you need 51% or more of the network's validators to validate the work of a miner. What if one miner can get enough computing power to overtake more than 51% of the network? Then potentially he can, right? Like he can approve his own work because he has so many computing devices. They are all computing devices at the end of the day. And he can then get his work approved and his new block approved and added to the blockchain. Um, but that's really just a theoretical possibility. The thing is that not only does, getting a 51% of the network computing power it's kind of impossible at this point. First of all, the computing power required, right? Like the computing required right now, the entire world there is a global shortage of computing devices that are needed, these chips that are needed for the purpose of mining of blockchains. Not just Bitcoin blockchain, but other blockchains. Computing devices are not just used in blockchain, they are used for various industries. All the chip manufacturers are under huge pressure and they're not able to meet the demand. So, can you imagine in this scenario, somebody comes and buys more than 51% of the global mining capacity right now? That's just, very hard to believe. There is just not that kind of supply. But let's assume they do. They somehow find all the money in the world and they find the suppliers in the world to get that kind of capacity. Then comes the electricity. They need electricity to even operate all those computing devices that they procure. When they procure all those computing devices, the electricity cost of Bitcoin today is higher than some countries. There are estimates that the cost of electricity of Ireland is probably comparable to the kind of energy expenditure by Bitcoin. So the estimates are upwards of $7 billion, 7 billion with a B, to even try and overtake 51% of the Bitcoin network. So that then becomes a huge disincentive. Now, what are you doing this for? Right? Like, okay, let's assume you have $7 billion to spend to try and hack the network. All right, you get in. What do? Now you have all the computing power. You're going to solve the puzzle faster than the next miner or any other miner on the network. You can do it because you have more computing power and you solve it. The problem is that what if we, go back to what we were doing it for. You were doing it so that you can change the transaction in your favor, an older transaction where money or Bitcoin can be moved from another wallet to your wallet, right? In trying to do that, you have to change an older transaction. The moment you try and change an older transaction, you change the hash of the previous block. And when you try to change the hash of the previous block, what you need to then do is you don't need to just solve the puzzle for one block. Solving the puzzle for one block takes about 10 minutes. Now you need to solve the puzzle for all those blocks before that you change the transaction for. So there are over, I probably think that there are over 700,000 to 800,000 blocks in the Bitcoin blockchain ledger right now. So it takes people or miners today about 10 minutes to solve one puzzle. You will probably have to solve that puzzle for 700,000 blocks all in less than 10 minutes. Now that starts becoming unbelievable, right? Like, how are you going to get the kind of resources to even achieve that? And lastly, what I will say is, at the end of it all, what were you trying to achieve, right? What was your purpose? If the purpose was to make money of it, steal funds from somebody else's wallet, guess what? The moment you can provably hack Bitcoin's blockchain, that is the day Bitcoin becomes worthless. The story is over. So there is no incentive. There is no incentive for anybody to spend billions of dollars to try and do something that still seems impossible to achieve, only to end up with Bitcoin in their wallet that is worthless because you just hacked the blockchain and you just ended the whole game.
All right, cool. So I think this is going to explain a very common question that everyone has, because a lot of words get thrown around Bitcoin, that it's not safe, it gets hacked, but we have been telling again and again that Bitcoin's blockchain tech is hack proof. No one has ever come close to hacking it. People lose their Bitcoin, but that's nothing to do with Bitcoin getting hacked. It's people don't store it properly, don't store it safely, or the exchanges or the wallets, software wallets in which they store it, they get hacked. But Bitcoin's blockchain tech has never been hacked. So I think that's it for this episode. We have another episode coming up where we will answer a lot more questions about blockchain technology. So we'll see you there.